This is the CPCU Champion Hour. We've got the most interesting man in insurance, and we're talking Insurtech. Let's roll. Here we go.
We're talking about a lot of these things. We're talking about how to mentor.
File that under only the best decisions are made after midnight.
Right. That's right.
Your network is your net worth. Connect with someone.
Episode 9. We're almost in double digits. How about them apples? We're almost there, folks. We're almost at number 10. So I know, depending on whether or not you count the episode that we did with Mike K, where we talked about all of our non-New Year's resolutions. So a quick intro, as usual. Like, comment, subscribe, and share. This is CPCU Champion Hour. We are a production of the Institutes, CPCU Society, and the CPCU Society volunteers. We do not get paid for any of this, so please, you could pay us off in likes and comments and subs and hitting the notification bell, and also sharing this out there so that folks in the insurance industry can get some of this kick butt information that we're sharing with you and these awesome guests like we have today. So we have we're talking Insurtech again today for this episode, and we have an awesome guest that we're going to kind of like get down in the nitty gritty about Insurtech with. But in that vein, our icebreaker at the top of the show here is, if you had one thing in your personal life that you could automate that currently is not automated, what would that thing be? So let's see. Should I take volunteers, or should I name the first target here? I'll go with Heather. I usually go with Precious because she's usually like just next to me on the screen. But so Heather, if you had one thing that you could automate in your personal life, what would it be?
Well, I'm like a huge Hitchhiker's Guide to the Galaxy, like movie and book fan and everything. That was one of my favorite books growing up. And that when Zooey Deschanel puts her face in the machine and it tells her exactly like what she wants to eat, and it just appears in front of her, that's what I would automate, because the decision about what we're going to eat most of the time results in my husband and I standing in front of the refrigerator for a really long time and going, well, maybe we just need to order DoorDash.
What do you want? I don't know. What do you want? That is a very good one. I will take a Star Trek. Damn, I forget the name of the machine. The materializer, where you just basically talk into it and ask it.
Transporter, or the not the transporter.
Yeah. I will take one of those in my house. I will probably weigh 9 billion pounds in short order after that, but it is what it is. But so that's a fantastic answer. What about you, Precious?
So I know that there's all sort of services that'll come out and do basically anything you need done these days, like walk your dog, your laundry, and those sort of things.
Mhm.
My struggle is the prioritization. So I'm notorious for, I have like shoe boxes and things full of correspondence. And it's that decision-making process of what to archive, what to toss, that sort of thing. Like, no one else could do that for me. It's not like sweeping or vacuuming where someone can like clean it up for me. But especially when the quarter comes to an end, I end up with like a stack of stuff. And so I wish, like Heather said, that I could just like plug my brain into something and just like push the stack forward, and that automatically it makes the decision of, this is valuable, you'll never do
Yeah.
this, don't buy that,
Yeah.
So the decision making process. But then I wonder how long it would take to like train the machine to understand my algorithms.
Mm.
And by the time I've done that, I probably could have just read the stack. So
Yeah. Well, the struggle is real. I feel you. I have piles every year that is the bane of my existence, to just go through things and figure out what stays and what goes. And, if I have to digitize something or keep it in the actual, physical form that I have it in. I actually run into that a lot with, I know a lot of people kind of like digitize their kids' art. And so like I have a stack of just like, these kind of like sentimental things. And some of them are really silly. I mean, they're just like little scribblings on paper, but they meant something at the time. So I definitely have a pile of that. And I'm like, the pile just keeps growing. I'm like, look, I got to get rid of some of these things, but how the heck do I do it? Definitely that. All right. So y'all Southern folks, you don't necessarily get this one. I understand that I could contract this out and it kind of automates it for me, but I want a more elegant solution to getting the snow and the ice off of my driveway and my steps. If I could have a Roomba type snow blower that I could just hit the button and just, when it starts snowing at 2:00 in the morning and I have to be out the door at 7 a.m., in the rare event nowadays when I have to actually drive somewhere for work or something, it would be really nice if like, there was just something that I could like, Ron Popeil said it and forget it and just let the thing like, roam around and clean up the driveway. And for bonus points, clean off the car, so I don't have to worry about that either, but whatever. Y'all down in our guest is, if he's still in San Antonio, he's in San Antonio, and you down in Dallas, yeah, whatever. We have to deal with it once in 500 years or whatever. But
so
that's definitely
a moving van.
Yeah. I call U-Haul. Yeah. All right. So without further ado, this episode is no frills because of how awesome the conversation is going to be and who we have on. So I definitely don't want to belabor the point anything longer than we have to before we get our guest on. So really quickly, our guest is, and I'm going to throw up a little bit of a screen grab here because this is one of the most quotable parts from his book. But so Rob Galbraith is our guest. He wrote The End of Insurance as We Know It, How Millennials, Insurtech, and Venture Capital Will Disrupt the Ecosystem. And so the quote that is the inspiration for our episode is, when insurance is not compulsory, the market penetration rates drop considerably, even though both exposure to loss and the need for coverage still exist. There's a saying in the industry that insurance is sold and not bought. And as brokers, Precious and I can both say that without a doubt, that is completely the case. Not many people come to us knocking down our door for all the different types of coverage. Typically, they come looking for one piece of it, and we have to sell the rest. Just for posterity, this is my signed copy of The End of Insurance as We Know It. I was able to get this signed by Rob when I went to kind of his book tour that he went through when he was in New York City. So that was a fantastic time. So without further ado, I would like to welcome onto the show our CPCU champion profile this week, Rob Galbraith. All right, Rob, $64,000 question. If you had one thing in your personal life that you could Insurtech automate or just automate, what would it be?
Yeah, I heard you guys talking when I was in the green room, so I those are tough to top. So I don't know about you guys. Like, obviously, right? We've all been kind of cooped up in the house here, and it's been a difficult couple of years. So the one place that I reliably go every single day is our Starbucks. That's literally like a 2-minute drive down, and I go through the drive-through every day to get my coffee and my wife a hot chocolate. And if there was a way that we could make Starbucks coffee the way it tastes from Starbucks, or the Starbucks hot chocolate the way it tastes from Starbucks, like at home and not have to go out, we would do it. And I know when the pandemic first started, I tried like the Via, like the instant coffee, and I've done French presses the whole night. It's just not the same. And so, yeah, sometimes like it's like that's my human face-to-face contact for the day. Everything else is on the screen like we are now, right? So it's probably been a good experience actually to keep sane. But yeah, like getting up, even cold, hot, doesn't matter. Like every day after my daughter goes to school, that's like the first place we go for the day start. So if I could automate that and not have to get out and stay in the jammy panties a lot longer, I would do that.
We're now it's my mission to get George Clooney on here and talk about the Nespresso machine and whether or not we could actually get some Starbucks coffee into it, because I feel you right there. My Starbucks caffeine fix is like that's the one thing during the day that I'm also kind of like looking forward to. It's usually an afternoon thing for me to kind of keep me going. So I love that answer. Anyone who is not familiar with you, who might be watching this program, just Reader's Digest or elevator pitch kind of minute. Who are you? What do you do? And what are you working on right now?
Yeah. So yeah, it's a privilege to be on with you guys and to know all three of you for several years now through the CPCU Society. It's great. My name is Rob Galbraith, as you guys mentioned. I worked for many years, almost 2 decades at USAA here in San Antonio, Texas, where I'm still based. Started my career kind of as an analyst, moved into becoming an actuary for a little bit, and then had the opportunity to move to the underwriting department, and spent most of my career as an underwriter and as a leader. And really kind of got involved in Insurtech, which we'll talk quite a bit about. USA being such an innovative company. I wrote my book, which came out in February of 2019, The End of Insurance as We Know It, that you already mentioned. And since then, just been kind of on a tour, speaking, advising companies, doing some consulting, hopefully writing another book that'll come out this year. And so that's really a big part of what I do is, I guess you could call it, advising and speaking and consulting with both startups and large corporations, you name it, about how to take advantage of this Insurtech movement. And it is a movement, I truly believe.
Yeah, and really quickly, I'll give you a short little picture at the top, because I always forget. I always ask everyone to give their contact details and how to follow you at the end. It's really important to talk about that right here at the beginning in case people want to find out more about you. Don't leave the program yet. Check this out afterward. But there is a podcast, a regular podcast that you put together, right?
Yeah, absolutely. So my co-host James Benham and I, every couple of weeks, we have a new episode coming out from the Insurtech Geek podcast. I think we're on episode 73 now, so a little bit more than 9. And congrats when you guys get to double digits the next time. It'll be legit at that point. And so we speak with industry thought leaders from really all over the world. We spoke to folks from Asia, from Europe, from the Middle East, and of course here in the US and in North America. So always great conversations. You can subscribe on many different podcasting platforms. We do both video and audio, and we like to get to know our guests a little bit, and then obviously hear about their companies and their technology and how it's changing the industry. And it just goes to show you the variety of smart people that are looking to change the world. And maybe not all of them will, right? But I'm sure that a few of them certainly will over the course of the next decade. And so it'll be fascinating to kind of see their progress over time.
Oh, without a doubt. You have a bunch of movers and shakers that I've, some of the podcasts that I've listened to, and then a bunch of the ones that I've just kind of seen who the interviewees are, and haven't had a chance to listen to yet. You have a ton of movers and shakers and innovators in the space, and without a doubt, at least a couple of them are going to hit on something that is, revolutionary, or will stand a long test of time and will become, at least the standard for the foreseeable future in terms of insurance, in terms of, whether it be distribution channel or how insurance is actually underwritten or claims adjusted. So definitely, if you are a podcast person, check that out. It's called the Insurtech Geek Podcast. And like Rob said, you can Google it or check it out on any of the podcatchers that you would normally listen to. So, all right, I will give you, Heather, first crack at Rob. What question do you have for him? What do you want to know about what he's doing right now?
So, Rob, since this is the CPCU Champion Hour and you are an illustrious CPCU, we'd like to know just a little bit about what your CPCU history is, what you're doing with the CPCU Society today, just to let the viewers out there know a little bit more about your connection to the society.
Yeah, great question, Heather. And I could speak the whole champion hour about this. So I'll try to keep it a little bit shorter. So definitely if folks want to know more after this, please feel free to reach out. I always love sharing my story. And each of us has a unique story, as the three of you know, right? And for me, I actually started with an economics degree. I'm born and raised in Michigan. I was born and raised in Ann Arbor, where the University of Michigan is, but I did not go to the hometown school. I went to the rival school, Michigan State, so I'm a proud Spartan. And I was an econ major, always interested in business. I always tell people, like, ever since I was a little kid, 2 years old, my mom pushing me around in the shopping cart at our local grocery store. And, we would just go through the aisles and put all the stuff and the cart would be loaded up. And then we would go to the checkout and my mom would just, give them a few slips of paper and a few metal coins. And we got to take this whole loot home. I was like, this is amazing. This is incredible. Like, I can't believe they fell for that. Right. We just gave them some paper and some coins. I always just kind of had an interest in business growing up. So I was an econ major that kind of suited me perfectly. Had the chance when I graduated to work at the Federal Reserve Board, our central bank in Washington, D.C. for the first 2.5 years of my career. Just an amazing experience, right out of college. Moved to San Antonio for personal reasons. And I was, had a girl that had gone to law school down here, and she's now my ex-wife. So this is a long story, but we have a very good relationship. We were college sweethearts, and so we still get along to this day. We have a wonderful son together. I'm remarried, and I have a wonderful daughter and a stepdaughter. So my kids are 20, 17, and 11 now, which is hard to imagine. And so I was looking for a job in the late 90s, and a buddy of mine had actually told me at the Federal Reserve, hey, whatever you can do, get on this company, USAA. They're based in San Antonio. He'd gone to high school and college down here, and he's like, whatever you can do, like, just to get your foot in the door, do it. And this is before USA was really a household name. Certainly, if you were in the military, or a family member, you'd heard of the company, but it was way before they advertised on TV and what kind of as ubiquitous as Geico, Progressive, State Farm, all the personal lines companies that we know and love. In fact, it was probably about 10 years after I started working there that my mom saw the first USA ad on TV, and she was still in Michigan. She called me. She's like, "Oh, I saw your company ad on TV." And she didn't say it, but kind of what I could tell was like, "Oh, this is a legit firm you work for. You're not going to move back in the basement." Like, I'm like, "Mom, I'm married. I own a house. Like, I have kids. I'm not moving back in the basement." But so yeah, thankfully we got big enough like to advertise on TV. So Mom was assured it was a legit role. I started actually in the human resource department. I had been an analyst. I had done some computer programming for the PhD economists at the Federal Reserve. And so at the time, they actually had a very forward-thinking group within that HR department, collecting a bunch of information about job openings, promotions, salary information, like, where were folks needed, what was going on with staffing. They had a whole data warehouse. They had a whole suite of some just amazing business intelligence tools. And so that was really kind of my first foray into the whole world of data warehousing, data marts, and stuff like that. So for the first 2 years, I really enjoyed working there. But the CEO would come on quarterly meetings and talk about how the business was doing, and I had no idea. I was obviously disconnected from the actual operations of the company, and so I really wanted to get to know, like, how do we make money. I had the opportunity to move over to the finance department and basically be an analyst for the loss reserving actuaries. And that's when my boss at the time, I had told him, hey, I want to know more about the company now that I'm in the finance department, and how we make money. And so he said, you should take CPCU Part 5, which I'm dating myself now, but that's the insurance operations exam. It's the 520 of today. And so I just took that one exam. It was really hard. I had to study a ton. I didn't know anything. And it was ironically the very last blue book exam. So, a lot of our CPCUs, it's based on, hey, did you do the 10 parts, the 5 parts, the 8 parts, you do computer, whatever. So I remember my hand was just throbbing at the end of that thing when I was done. But thankfully I passed. And so, I had learned so much just from that one exam that I really wanted to continue. So it took me about 2.5 years, and it was right during that transition. So I ended up taking 9 exams. So I guess it was one less than the 10, one more than the 8. Thankfully, didn't fail any. I was very, very close, probably about 3 times. Probably the worst one, actually, for me. I know accounting and finance is tough for a lot of folks, but it was the legal one. My, wife at the time was a lawyer, so somehow I thought, like by osmosis, I guess her studying in law school, like I know about insurance contract language or something, and the exclusions and the exceptions to the exclusions and all that. No, so I have no idea how I passed that exam. I always thought that there was some just benevolent person grading my exam or something. I don't know how it worked. But anyway, thankfully, I somehow screeched that one out. Um, After I got my earned my CPC designation, right about that time, there was a new designee luncheon for our local Almo chapter, and my boss at the time invited me. It was basically a candidate luncheon, but I was at the very tail end. I was definitely going to get the designation, and so I went, and that was the first, I guess, exposure knowledge I even had about CPCU Society and what it was. And that was their membership meeting. It was basically the first meeting of the year, and they were passing around kind of committee sign-up sheets to see, what committees that people wanted to volunteer to be on. Well, my boss was the chair of the ethics committee, and so of course, I did what I thought I was supposed to do as a young, insurance professional. I signed up to be on my boss's committee. About a month later, he came by my desk at work. He also worked at USAA, and he said, "Rob," he says, "I'm just too busy." He was a vice president at the company. He just said, "I don't have time to serve as the ethics chair anymore." And so, as the only other member of the ethics committee, you are now in charge. I was like, "Oh, okay." Like, man, I got to figure out what this committee actually does. So I figured out it was basically 3 things. It was to help put together a program for the March luncheon, which was Ethics Awareness Month, to help run some just awareness campaigns throughout the year about what it means to be an ethical insurance professional, the importance to the designation, and obviously the pledge that we all say as CPCUs. And then the third one, which was probably the most intimidating, was the ethics committee actually audited the chapter treasurer every year. And the treasurer at the time had been the treasurer for about 20 years. Like, I know many chapter treasurers out there, have done it for a long time for their chapters, and they're just amazing people. And like, nobody wants to mess with them. Nobody wants to understand it. Like, they have a system that works. Like, don't mess with that. And so I remember going to her office. She ran a small agency, and going into her conference room and looking at a bunch of financial numbers. I had no idea what I was looking at, whatever. And she would be pointing out stuff and making recommendations, and so I'm just taking a bunch of notes, and like, that was my report. Just basically all the things that she thought her own process could be improved. So managed to survive that, and just took a variety of roles within the local chapter, and eventually became chapter president. And that was an amazing experience. And not only did it really give me my first practical leadership experience, but it allowed my company's executives that were CPCUs that came to the luncheons and other events that we had to see me in that role. And I will tell you that, like, probably a year or two after that, I had the opportunity to become a manager at USA, and I was in a formal people leadership positions for 10 years at the company. And people said, it was because we saw you as the president, and we saw those leadership skills, firsthand. And that was the first time that we kind of could project, you're not just an analyst, right, working with numbers, but you're able to work with people as well, and to kind of lead them. And so I very much credit my volunteer leadership experience at CPCU with getting those job promotions at USA, and obviously allowing me to kind of eventually go off and have a career on my own. After that, became a regional chapter governor, got involved in interest groups in the leadership there, and then eventually served on the leadership council from 2016 to 2018. Took a year off from volunteer leadership, and then was asked to lead the membership committee at the beginning of 2020. And so that's what I do now. So I'm in my last year as the chair for the membership committee, and it's a great group of folks. Many of us have served in several different volunteer leader capacities within the society, and really we focus on recruitment and retention strategies for the society. What can we do to help grow our membership, and to make it a more robust professional society. And obviously, you guys know, like, we've really gone through just some big changes in the society the last couple of years, and particularly the pathways membership now not just being that alumni association for those that have the designation, but really being an open group for all insurance professionals, regardless of whether you've got your designation or not. Still promoting the importance and the value of a CPCU designation, but not being exclusive to those that have the designation.
Wow, that's you have a story there, Rob, that all of us can probably reflect on and find some similarities to, because CPCU is kind of a tie that binds, I guess you could say, across the insurance professional's career. So really appreciate you sharing that. And I think, Matt, was your question up next?
It is. So I get to I drew the short straw, and I have to introduce the controversial question. So but you know what? I mean, most people who know me understand that I am not bashful when it comes to at least stirring up some mud a little bit. But that being said, we're not going to flame anyone. We don't do that on the show. What we're doing is more talking about kind of like industry wide. So you had recently, Rob, I think as of November, maybe was when this, at least when the interview got published, but you'd done an interview, and I'm going to pull it up here if I can make the tech work here. You'd done an interview with Insurtech, Ohio. And this was a little bit of a wide ranging interview, but something that really popped out at me was just talking about the general value proposition of Insurtech. So, you've had a very deep kind of involvement in the Insurtech space for a number of years now. And so there aren't too many other people out there that have kind of like I think the breadth, at least, of exposure to what's happening in Insurtech. And one of the things that came up in this interview was a question about basically just the value proposition, right? Like, Insurtech is this nice kind of shiny new thing that a lot of carriers and a lot of entrepreneurs are dedicating a lot of time, resources, and especially money into to try and either re-engineer the wheel or find some areas where you can kind of get some better economies of scale and either reduce expense or increase productivity. But the value proposition still doesn't seem, or at least the value that's coming out of it still doesn't necessarily seem at least equivalent or proportional to the amount of investment, in time and money and resources that have gone into the Insurtech space. So do you see that as something that's going to persist, or is there something changing where that value proposition will now begin to hopefully outpace what has been put into the system to kind of, make it go and kind of like light the fire in this, was fledgling and now this kind of new area of innovation with the insurance world?
Yeah, no, that's a great question, Matt. And so I guess I would start by saying I truly believe that Insurtech is a movement and not a fad. And I think that is a distinction that's really important because many insurance professionals, career insurance professionals, such as all of us on this call, and I know myself and my interactions, that's actually part of the reason I wrote the book, because I got the sense in talking to a lot of my peers that it was kind of this too shall pass, right? We've seen other fads and we've seen other things, and this isn't something to get excited about. This is just another bright shiny object. And when you look at a lot of other industries, they certainly have had a lot more turnover in terms of the top companies and even the way that things are done. Obviously, Blockbuster Video and kind of the rise of Netflix is a classic case study. We can all think of other ones, and insurance is unique, right? So I definitely don't want to say that insurance is like any other industry. There's a lot of reasons for that, right? It's highly regulated, of course. It's an intangible product, but it has some tangible aspects too, right? We talked about the bought not sold part. It's very much a set it and forget it. Like, once you have it, you don't want to think about it, right? And in
Yep.
many ways, it's like, other than your premium going up, right, or maybe when you have a claim, right? Yes, maybe there's some loss control, but for the most part, it's not something that a lot of people think about, nor do they care to think about it. And so it's not the same as we're talking about Apple as an experience brand. It's not just a technology company. Microsoft's a technology company. IBM's a technology company. Yes, Apple sells tech, but it's really kind of about the experience, right? And
Yep.
the beauty of the product design and all those kinds of things. And so, insurance today isn't really an experience model. I can't think of one that's out there that's an experience company. Yes, there's some features and some nice, services. Like I think about high value homes and some of the private buyer response, services that companies offer and whatnot. So yeah, there can be some elements of that, but it's not at that same like a lifestyle. Like you don't brag about what insurance company you're with, right? But what I saw,
it's rare. I'm sorry to cut you off. It's rare,
Yeah.
but there were a couple of. I mean, like you worked for one of those companies that I don't know if people necessarily brag about it, but when asked for a referral, I mean, military families. If someone who is also a military family is not with USAA, I mean, 99 times out of 100, I would expect that they're at least referring right to them, but. I wouldn't say it's because of the tech necessarily, right? Like I think it's more of like that kind of community aspect of it, which I find it interesting because you coming from USAA, they're one of the leaders in trying to take that community and culture that they've built and integrate the tech into it, and hopefully not losing what they've garnered over time. But yeah, definitely with like I can't think of too many people that are like outside of people who work in the insurance industry that are walking around with a carrier's T-shirt and like they want the Supreme T-shirt. They don't want like the insurance company T-shirt out there. Sorry for cutting you off, but just random thought.
No, you're right, Matt. And obviously, USA works hard, because there is this tie to the military, and it is you're talking about a member, right, not a customer. So there is that sense of like, hey, we belong, right, and we have a connection in a way that somebody did a beautiful job describing it to me one time. He had everybody kind of put their phones like on the conference table that we were at, and he's like, who are you with? It's like AT&T. Who are you with? Verizon. Who are you with? T-Mobile. And it was like, what do you have in common? I was like, nothing. I don't care if the person next to me is an AT&T customer or Verizon customer. Like I don't feel an affinity just because I'm AT&T and the person next to me is AT&T, right? And that very much describes most insurance companies of like, yeah, there's no affinity. Whereas USA, because of that military connection, right, there is an affinity that's there that's not typically there. But I was always amazed by the perception, right? I had the chance to speak with a lot of USA members, thankfully, over the years, and I was always amazed by they didn't know the ins and outs of the product, right? So it was very much like kind of this ephemeral feeling that they had. They liked the folk that when they dial in and they called about their account, people would address them by their rank and their branch of service, right? And small touches like that, which again doesn't make a material difference on, hey, is this contract a good contract? Is this premium a good premium or not? But those are the types of things. And then of course the claims experience, and that's true for any company. And that claims experience, very much, I think we've all had that experience of like, hey, that makes or breaks a customer. Either you earn a customer for life if they have a good claims experience, or man, not only have you burned the bridge, but that person's going to tell everybody that they know about their poor claims experience, right? So brand advocacy, yes, right, but lifestyle brand is probably not quite there. But one thing that was beneficial about working at USA, and I think this is an aha moment for a lot of folks, and kind of the connection to Insurtech was, I started working there in the very late 90s and in early 2000s. They were one of the first companies to actually quote and bind coverage online. So if you went to USA.com, and later it became the mobile app, right, they would offer you a quote, whereas most companies would simply tell you where your local agent was, right?
Right.
You would have to find a phone call or set up an appointment with them or whatnot. And so that ability to transact business online, they were one of the first ones, because because their military members move all the time, and it doesn't make sense for them to have that connection with a local agent, because they're having to move every 2 to 3 years. That the relationship isn't with the agent, it's directly with the company, right? That model is different than a lot of other companies. And so because the relationship was with USA, not so-and-so agency, that ability to kind of directly do business with somebody online, and again, you had a lot of military deployed post 9/11 in places like Afghanistan, and so you had use cases of like, hey, this officer is on at 2 a.m. local time. They're on one bar and they've got to do business because, their spouse back home is having to deal with the kids and everything else and doesn't want to have to
Yeah.
deal with, right, whatever insurance issue. How can we meet the demands of that customer? So because you had some of these like customers that had exceedingly high demands, if you can design to that and to make that experience good for them, then guess what? Like, hey, if you can serve that military member at 2 a.m. on one bar in the middle of Afghanistan, then you're going to be able to serve a lot of folks here stateside, right, that are regardless of whether they're in the military or not. And so I think that was kind of a little bit of a secret sauce that kind of allowed USAA to get on the early side of the technology adoption curve. And that just led to a lot of the things that I was seeing, a lot of the innovation and a lot of the possibilities that I saw. And I got to work on a lot of innovative projects while I was there. Some succeeded, some didn't. And so that kind of really led to my direct experience with Insurtech. So, long-winded way to get back to your question, Matt, of there's always this hype cycle, right? So I think about the internet boom in the 1990s, followed by the bust, right? And everyone can remember, for those that were, early adults at that time or whatnot, kind of the technology or the financial market side of it. But the result after the bust was we had a whole bunch of internet infrastructure that we didn't have prior to that, right? And so all those wires, all that networking equipment, like that actually led to the rise that we've seen up to today. And so a lot of the Insurtech investment that we're seeing right now is building kind of some of that infrastructure. Yes, it's not all going to work out, but like it's going to leave behind, right, kind of pathways. And I think that's we're starting to see that. I think Insurtech, I categorized in 3 different groups. One was Insurtech 1.0, which is you insurance people are idiots. We're just going to replace you all, right? Then they realized, oh, insurance isn't the same as everyone else for lots of different reasons. So then it was Insurtech 2.0, and it was all about partnerships. And that was like the big buzzword. Oh, we're going to partner, we're going to partner, we're going to partner. I think we're in Insurtech 3.0 right now where it's both. It's kind of a mixed model where you have some companies that are looking to partner. In fact, still probably the majority of Insurtechs are looking to partner. But then you have some that have gone out on their own. Lemonade, right, being probably the primary example of a company that saw underserved segment of the market, renters insurance, that everyone kind of wrote that as an accommodation product, but nobody really focused on that. It tended to have high expense ratios relative to others, and so they quickly became a top 10 writer in renters, and were able to leverage that in some great marketing and technology, and then expand into pet insurance, life insurance, and ultimately, right, they've gone public, and now they're into auto insurance and have purchased Metro Mile. You're starting to see a lot of MGAs, a lot of specialty or niche carriers, and this whole start as an MGA and if you're successful, become a full stack carrier. Like that seems to be a model that's happening as investors. You're starting to see the exits, and investors are starting to make money. There's going to be even that much more money kind of pouring into the sector. So you have to judge this stuff on kind of a 5 to 10 year horizon. That's what the venture capitalists are using for their return. And so it's still, I hate to use a sports analogy, but early innings, right? We're probably in the second or third inning of a 9-inning game here.
Yeah, and what's interesting is, my former life was in biotech, and the research that's being worked on today, everyone, and you could say it's maybe like the news cycle or just kind of how information is disseminated, but the technologies that's being worked on today won't be fully realized in terms of the value proposition until, like you said, 5, 10, sometimes 20, 30 years down the line, because you have to lay that groundwork, right? Like, and there's some growing pains too that have to happen with it. Not everyone had telephone lines overnight after, Alexander Graham Bell makes that first phone call, right? It takes that time and that progression. And also a lot of this is foundational. So, what's being built right now is, less so what it's going to look like in 10 years. It's the things that have to come first in order to then build off of. You build the platform first. I do a lot of work in blockchain now. You build the platform first, right? Like you build the blockchain first, and then you build the applications and the end use cases on top of that. And so we're still, like you said, in the early innings of that. It's going to be fun to see where it goes. I mean, it's going to be exciting, and I think a lot of what we've covered in past episodes has shown that a lot of the investment dollars are continuing to not just persist but increase in terms of the investment in the sector, which is also reassuring moving forward. So, all right, I'll get down off my soapbox. Precious, you've heard me gab probably more than most. I'll kick it to you because you have another kind of use case kind of question here for Rob to kind of pick apart.
Yeah, absolutely. So I'm just enjoying, all of the information being shared here. And so in 2019, I actually hosted Rob's book signing party here in Dallas. So I've got my signed copy on the bookshelf as well. And it's always good to hear just even how the story is continuing to evolve, since then in this short, window of time. So my question is more on, data, right? How we aggregate data, where data comes from. And so we understand that Insurtech and FinTech kind of, they're kind of sister processes, right? And so with like the evolution of fintech, we saw things like Rocket Mortgage, where all of a sudden, kind of at the click of a button, boom, it was able to pull in all this information from, just all the bits that are floating around out there, and make quick decisions versus the 20-page mortgage app, right? And so in the underwriting world, on the insurance side, on the Insurtech, we're seeing that there's this whole concept and focus on data provenance, right? Where does data come from? How do you prioritize it? What's the most reliable? So if someone's writing a homeowner's policy and we have access to county records and we know what's been reported as far as year built, some of that info versus customer provided info. So there's all sorts of sources of data and varying levels of open sources, closed sources, things like that. With all the availability of data, do you see where there's actually been improvements and efficiencies on the Insurtech side as far as how we use it? And has access to data improved outcomes as far as what you've seen so far?
Yeah, great question. So, it kind of aligns right with my career trajectory. I think there was a time when I moved from the pricing area at USA to the underwriting area. The reason I moved was actually to start an advanced analytics team. So I was one of the first team members of this new team. This was in 2005. Like, it was just really revolutionary at the time, right? You probably would have called me a data scientist today. We didn't use those terms back then. But what was cool about it was, instead of setting the auto rates for South Dakota and then doing the same thing for Wyoming and then for Colorado or Washington, each state has its own nuances, but it was very much rinse and repeat. A lot of it was the same over and over. Moving over to that role, it was like, hey, we have all these underwriting guidelines, and most of them are based on, tacit knowledge, conventional wisdom. You very much had an underwriting apprentice or an underwriting assistant that trained and over time, right? Maybe they became an underwriter and you kind of slowly increased their level of authority, maybe, added product lines, and eventually they become a senior and a lead, and maybe, in a decade or two, they become a manager, right? Or even an executive. And we were asked to come in. We didn't know anything about underwriting, right? And it was kind of like, hey, we have rules like we won't insure a secondary home unless we insure that person's primary home. And you're like, okay, I can see why that's conventional wisdom, like why that rule makes sense. But like, that's actually a testable hypothesis. There's 8 states that are collateral business states that we couldn't have that in. And so you have loss results from that versus the states where you do have that rule in. And you can compare them, right? And what we found was, basically, these secondary homes had half the frequency because they weren't being used as much, but they had twice the severity. So, if something went wrong, you had a plumbing leak, you're not there with the towels to kind of mop it up and to kind of, right, like, no, it's really ruined the wall sockets and the drywall and all that. It's going to be a really costly claim. And the pure premium, right, the loss cost was actually almost identical between those two profiles. And so ultimately what we decided was like, you know what, yes, they have a different loss profile, but there isn't any reason, there wasn't anything inherently about, insuring their primary home that made their secondary home any better risk. It was just a different risk. So if you kind of, adjust accordingly, you should be able to write secondaries without insuring somebody's primary. And then it was like on to the next question, and all the questions were different, right? It wasn't ever the same question. And so it was really cool. And it was this kind of, melding of kind of, insurance expertise with, data science and numbers. Well, now you can do that like on steroids with, all of the telematics data, just the amount of sensors that are out there, smart home devices, wearable technology, you name it, along with the massive computing power that we have, artificial intelligence. We were trying to do things like calculate customer lifetime value and things like that, and product sequencing. And we came up with some rudimentary analysis, but you can do like so much more in today's world. One of the things that's interesting, in one of the grasses, I guess, always greener on the other side type situations. So a lot of Insurtech startups are just so envious of what traditional, agencies, brokers, carriers, they have all this rich data that they want and they don't have. And they're like, I don't know how to price my product, or I don't know what underwriting rules I should have because I don't know. I'm just starting out, right? And they're like, man, if I had that wealth of data and information. At the same time, for those of us that have worked in those environments, like, it can be a real pain in the rear. You've got like all these different data sources, information that you've collected, information you've bought from third parties, whether that be a driving record or a credit report or things like that, an inspection that's got photos and the observations of the inspector. Some of those might be checkboxes, but some of that might be free text. And then you've got to somehow manage that. And then you have to put it into a workflow for somebody. And particularly if you work in claims, if you work in underwriting, or if you're an agent or a CSR or somebody, right? Like, everyone's using a system and everyone has a workflow, and you're trying, and we see people all the time, and you probably, we all know this, and if we don't do it ourselves, like when you've got multiple screens, multiple tabs, and you're kind of like, and I've had people complain to me about that. It's like, Rob, it's 2020. Why are people taking information from screen one and having to type it into screen two? Why don't the system, talk to each other? Why is this, more transparent? So that's where, of course, those Insurtech startups like have a lot of advantages. They've got more modern platforms, modern infrastructure. They don't have systems from the 1970s or 1980s, right, that they're trying to build upon and kind of talk. They can build this through APIs and other things where it's kind of seamless integration. And there's a lot of companies, quite frankly, that help those traditional companies, with these types of challenges out there. So the one thing I would say that I think is really interesting is, you kind of touched on this, Precious, but in the past, we would collect a lot of information that were what I call proxies for risk. So, and I make the comparison in my book to maps to GPS, right? So for decades and really centuries, right, we've all had paper maps, and, you could plan your route. You can look at the mileage. You can look at, is this a freeway? How many towns am I going to go through? Like, you can make an approximate estimate on the fastest route, but you didn't know if there was any construction. You didn't know if there was an accident. Whereas GPS, you've got so much more information. It's real time, right? Everybody's phone that's on that route right now is pinging information to the cell network. That cell information is pinging, Google or Apple Maps. They're storing it on their, cloud servers. They're using artificial intelligence. They're literally calculating millions of different routes of the fastest route, and then sending it back to your phone and giving you the 2 or 3 routes, right, that are the best. And now it's amazing what they can do, right? Even real time, like halfway on your journey, it's like, oh, save 2 minutes if you go this way instead, and stuff like that. I mean, it's mind boggling, like what happens. Like, it's so intuitive. That's the beauty part. It's so simple, and it's the way that you would want to design it. But yet the calculations and the data to make all that actually happen behind the scenes, right, is really mind-boggling. So much of the information that we collect about, what is your age, gender, marital status, and then, here's your auto rate, like, that doesn't make sense anymore. Yes, we know that 18-year-old single males as a group drive worse than 35-year-old married females, but with telematics, like, I can see, quote unquote, like, exactly how everyone drives. And so, there's probably an 18-year-old single male that's a very responsible driver out there, and there's a 35-year-old married female that we wouldn't want to get in the car with while she's driving, right? And so with that kind of information, storage isn't a limitation anymore. Processing power isn't a limitation anymore. And so it's just a totally different mindset. I used to think that there was like just an incremental kind of path, but the more I've worked with companies on it, I just feel like it's a fundamental kind of paradigm shift. And that's where, again, I think the startups have a lot of intuitively, like that's where they're going, right? Whereas I think for many of us that have worked in traditional firms, it's like getting there, it's like, a multi-step process, and it's really difficult. Just a quick story to that end. 1 year at USAA as a manager in the underwriting department, we were tasked with a 5% productivity improvement, meaning we're going to review 5% more accounts, but not add staff to the underwriting staff. And, I worked with the innovation team, worked with the data science team, others, and we were like, hey, they're already, a lot of information is being presented to them in their underwriting system that's coming from a lot of different locations. They're looking at all that, they're making decisions, they're inputting their decision into that system, and then that's going off, right? And somebody's sending a non-renewal letter or whatever it is, right? Whatever action needs to happen. We're like, you don't need to change anything about the workflow, but you could just put artificial intelligence behind that, where that underwriter is actually training artificial intelligence. They may not realize it, right? Right now they have a done system. You could make it smart by having them train AI, and then over time, the AI could kind of learn about which accounts are acceptable, which aren't. It could still funnel out those borderline ones, right? It can even drive more consistency among the underwriters, because when you looked at that, right, when we would do audits and stuff, you'd say, hey, so-and-so is accepting 90% of the risk and so-and-so is only accepting 10%. Like, why is this so different? They have the same guidelines. And so we figured out conservatively, we could make a 50% productivity improvement. So we took it to the chief underwriting officer. We're like, hey, you asked for 5%. We could make a 50% improvement in 12 months if we invested in this artificial intelligence. And it was like, no, I don't want to go there, right? Because the type of problems that I have to deal with about, now you're talking about like staff reductions, retraining, right, a new system, like in the short run, there's a lot of pain, right, to get there. And so it was like, no, it's just easier to kind of stick with that 5% kind of incremental improvement rather than that, huge paradigm shift. And so I think that's the challenge that most traditional organizations have today versus startups. It's just the mindset. This technology is happening so fast. We talk about young people and millennials. There's a wonderful book that's out now called The Myth of Experience, right? So for those of us that have been in the industry for 25 years or more, it's like we're proud of that, right? We want to share that knowledge, and again, that kind of apprenticeship model that I described. But the reality is, I've worked with interns that are 19-year-olds that are teaching me about blockchain and kind of mapping out what our organizational strategy should be. And they're doing that based on the 3 to 6 months of programming experience they have at their college, blockchain club, right? And yet these kids are like leaving before they get their graduate degree, and they're going to Wall Street and they're earning 6 figures just because they have the relevant experience with the technology. And so, a lot of people have talked about reverse mentors and like, oh, help me with this tech thing or whatever. But it's not just about like, helping you get your email on your BlackBerry or whatever that it might have been in the past for those reverse mentorships. It's like young people, they are immersed in technology in their entire life, and so they can see possibilities where many of us can't, because they're what's known as a technology native, not a technology immigrant, right? They've grown up with it, and so they see possibilities in a way that I just can't imagine. And so yes, my experience matters. It still does. CPCU is still highly relevant. We all need to have that kind of basic knowledge about insurance, but at the same time, we need to be open to that's not the end all be all. And I do have a lot to learn, even from somebody that's just starting out their insurance career. We talk as CPCs about being lifelong learners, and it's never been more relevant than our current time.
Yeah.
Awesome.
So the what's interesting is, sorry to cut you off, Precious. Rob, you invoked Blockbuster earlier on, and what's interesting is I actually did a case study during my MBA, and we kind of came up with something that looked like Netflix when we did the case study. The technology was there at the time to make something look like what Netflix is today. But what's really interesting is that they had to take that intermediate step of building the mail order DVD business, which was in some cases an incremental step before they got to that full-blown streaming service behemoth that they are today. And so that's interesting. It's the blending of the new with the old does sound like sometimes you have to kind of like take an intermediate step, right? Something that it has some value proposition, it has some positive return, and it also sets the table for that next step or the leap forward that happens after it, which we all know can be a fantastic revelation or innovation that comes with it. All right, I want to be respectful of your time, and we have 3 questions that we normally ask of every single guest. Don't worry, these are not like Jeopardy trivia type questions. These are get to know you type questions. I will give Heather first crack. Pick any of the 3 that we normally ask of our guests and let her rip.
So, Rob, obviously, as CPCUs being lifelong learners, we always like to question all of our champion guests. What is it that you're reading or maybe watching right now that that you would recommend, or that you feel that you want to share with all of our guests right now?
The end of insurance as we know it.
So, you know, I don't know if there's a specific book that I recommend, but I love to read. There's probably no surprise there. And I have more time, as many of us do during the pandemic, right? Not traveling as much, and kind of have the mental capacity at night to like settle down with a good book in a way that I think, it's just traveling is like too frazzled to do before. I've actually been reading a lot about Asian history, about like China and World War One and World War Two, Japan, Korea, and a lot of these countries. And I realized that many of us in the U.S. we have biases. We know we all have biases, right, on many different things. But we certainly know American history, and we're taught European history in school. But I really don't know that much about other parts of the world, and so that's really what I wanted to learn. And it's really relevant for Insurtech because obviously there's been just a ton of innovative companies that are coming up in the Asian market. And one of the things I find fascinating is that they have different customs than we do, and there are things like data privacy that are very different between Europe, right, which is very focused on privacy and protection of information. Asia, where it's like, hey, in China, they even have a social credit score. It's not just like your credit in terms of did you pay your bills, but like everything you do, right? Did you pick up trash? Did you jaywalk and things like that? And they're coming up. It feels very kind of big brotherish to us. And in the U.S., we're kind of in the middle, right? We certainly have some privacy protections, and like there's California Privacy Act, but it's very state by state. It's very localized. We don't have a national policy. We're kind of in between, and I just think it's highly relevant for InsurTech and how it develops, and particularly when you talk about the life and health space, right? All the wearables that are there, and the type of information, and just the type of benefits that you could have, and obviously there's the creepy factor as well. So I don't know how it's all going to play out, but I just am really interested in learning more about Asian countries and Asian culture, and just kind of following kind of their startup path as it relates to startups in Europe, startups in Latin America, in here. And I do think there's a cultural element in terms of which ones will kind of find success in their home markets first, and then possibly expand out to the world.
I love that. You're making the pond bigger. I love it. All right, Precious, you got two to choose from. Which one you want to go with?
All right. So first of all, we so appreciate you taking the time to share with us on this platform. Every time I hear you speak, I'm just like mesmerized with all the information. So I had the pleasure of meeting Rob and sitting down and spending some time back when we had our regional meeting in 2018, I think it might have been. And, I got to spend time with Rob. That's also where I really met and spent time with like Mike Caselny, and some of the greats, right? So we all have the, CPCU champions that have been instrumental in our journey, in our careers, development wise. If you have, I guess, who would you like to honor today, and kind of mention and shout out as far as a person who's been a champion in your CPCU journey?
Yeah, that's a great question, Precious. And there's so many people. I definitely don't have enough time to name everyone, but probably the person that I want to mention the most is Tom Woods, who is a past president of the National CPCU Society. He was also at USAA. In fact, he's the first person from USAA that was able to serve as society president, and he recently retired, and I'm super happy for him and his family. He was a chapter governor when I first got my CPCU, and I think I didn't work for him for many years, and then I did work for him formally at a time at USAA, and so I kind of got to see him through CPCU first, and then as a leader at USAA. And one of the things that amazed me about Tom was that he was always giving back. It was like, hey, you've attained, you're at a vice president level, and you've got kind of a big portfolio of stuff that you're in charge of, here at the company. You've got a family, you've got kids, you've got, grandkids as you got older, right? And it's like, and we know he loves to golf. It's like, why are you still investing in volunteer leadership within the CPCU Society in all different levels, right? Both at the local level and at the national level. And it was just something that he was so passionate about. He was so passionate about giving back. He was so passionate about the next generation, and just kind of, paying it forward. And that was motivation to me, both directly, right? So his engagement in my career, but just as a role model as well. So I definitely want to honor Tom and just thank him for setting that example and for his mentorship throughout my career.
Awesome. Thank you.
I love that. I get the blessing of having Tom Woods as my my leadership council mentor, as a green newbie leadership council member. So hopefully I can catch him in between a couple of rounds of golf, or maybe even shoot a couple. I might have to come up with an excuse to go down and meet with him and play some golf there. As horrible as I am at it, but Precious and Heather did me a service. I get to ask like the really kind of super creative, like fun question here to end up the episode. If a movie was made of your life, Rob, what genre would that movie be? And then who would you want to play you in that movie of your life?
Oh man. All right. This is a great question. So definitely Jason Bourne and Matt Damon. Like, I've loved the Jason Bourne movies. I love that they're set kind of on site. Like, you get to see that location, right? It's not just a sound stage, like it's filmed there. They've got the right mix of kind of the action sequences within the drama. I love pretty much everything Matt Damon's in. Love The Martian, right? Love all the stuff, and so I'm sure it would be like a glorified version. We'd cut out all the kind of the boring parts, the going through contract language and stuff like that. But I have had the ability to travel throughout the world, particularly right before COVID hitting, of course, and so. I got to go places in the world that I would have never gone had it not been for my book, for my insurance career. And so I very much felt like it's like, oh, I've been in Istanbul, I've been in Sao Paulo, I've been in Sydney. It's like I just I think that part's kind of incredible. So yeah, definitely not as exciting as the Jason Bourne movies, but if you compressed everything into 2 hours, you can maybe make something similar with some artistic liberty in there.
Right. How dare you include that additional insured endorsement in there? Bam! Like, yeah. Wait, as a founding member of Treadstone Risk Management, I approve that answer. That is absolutely fantastic. So with that, I want to say thank you, Rob. I appreciate you taking the time. We know you're busy. We were talking about it offline before. It just seems like you go from one virtual meeting to the next nowadays, and it's difficult because it's just every day is loaded. So we want to say thank you so much for taking the time. And if anyone is looking to connect with Rob, look him up on LinkedIn and connect with him there. He shares a ton of high value information. Definitely check out the Insurtech Geek podcast that Rob is a regular host of and contributor to. And yeah, that's all we got for the end of episode 9. So did I miss anything, Heather and Precious? Did we make it?
No, we made it. And
yeah.
Thanks so much. And Rob, once again, I'll never forget, like we met up in Chicago on like the weirdest circumstances. You were at one conference, I was at another, and somehow we realized we were both in Chicago at the same time, and we all had pizza with Marty Ferboli. So that's my big Rob memory. And then of course having pizza with the astronaut in New Orleans.
Absolutely. Yeah, well, pizza's involved in a lot of our stories. It is. Yeah. So, thank you guys so much. Thanks for doing this, and love the guest. I know hopefully you guys will get to 73 episodes in the not too distant future, and all three of you have been an inspiration throughout your careers, and your involvement with the CPCU Society as volunteer leaders, and you're just fun people. So it's so great to be able to hang out. Hopefully we can do it again in person soon.
Thank you, Rob. Appreciate it.
Thanks
Yep.
so much.
And that's the end, champions. Peace.
I think these videos are brilliant, and I'm sure you will like them too. Please like, comment, and subscribe, and don't forget to click the notification bell.